Good to see you again, John. I understand you're getting into some stock trading. You are correct. And per the usual, I'm hoping you can tell me all about the tax implications. I will do my best. Great. Okay. So I am definitely worried about paying tons and tons of taxes. Why? Because I am gonna make so much money. Well, believe it or not, but you might be in luck. Really? How so? Because profits on long-term stock sales are taxed at lower rates. Lower than what? You know that wages and other income can be taxed at up to 37%, right? I knew it was something like that, yeah. Well, in 2023, if you make under $44,625 in only capital gains, you would pay zero tax. And if you only had capital gains income up to $492,300, you would pay 15% tax. Really? Yes. But be careful, because other sources of income get combined with your capital gains to wipe out those thresholds, which are based on taxable income. Those rules and calculations get a little complicated. I just wanted you to be aware. I appreciate it. So you're saying that if stock trading was my only source of income, the long-term capital gains tax rates are low? Yes. Other taxes can play into it, such as net investment income tax and alternative minimum tax. But those don't come into play unless the individual is making a ton of money. And because those tax rules get pretty involved, I recommend that we leave them for another time. What about capital gains above $492,300? Assuming it's only capital gains that we're dealing with, only 20%. Wow, that would be great. It's an incentive for people to invest in publicly traded companies. So if I am single and have wages of $150,000 and nothing else, how much tax would I owe? That would put you in the 24% tax bracket. So you would owe $26,076, not including penalties and interest. Did you just do that math in your head? Absolutely. Okay. And what if I made that much in capital gains? Long or short term? What's the difference? In simplest terms, if you hold the stock for a year or more, it is considered long term. Otherwise, it's short term. So what's the difference in how they are taxed? Short-term capital gains get hit with regular tax rates, just as if they were wages. So you would still owe $26,076. Well, that's a bummer. So you're saying that constantly buying and selling does not lower the tax rate? Correct. I believe the government's rationale is to encourage investors to leave their money in the company for a while instead of constantly throwing it in and dragging it back out again. What about long term? That gets us into the lower tax rates. So if you had no wages but $150,000 in long-term capital gains, you would only owe $13,729 in tax, saving you $12,347. Wait, wouldn't $150,000 times 15% be like $22,000? Good catch. That's because the first $44,625 of that $150,000 does not get taxed at all. The taxable portion is what is left over. Seems almost too good to be true. The kicker is that you need to leave the stock alone for a year or more. Oh yeah, makes sense. And that sums up the basics of capital gains on stock trading. Yeah, I assumed it got more involved than just that. Maybe sometime we can talk about wash sales and stuff. For sure. Great. So you got places to be? Always. You? Of course.